Welcome to Trading Lounge and the cryptocurrencies. We'll be looking at ETH here, Ripple, and also Bitcoin as well. For this particular market here, there's some things I know and some things I don't know. So when we go through all of these, it's really just to give ideas in terms of Elliott wave and the trading levels. So in regards to this weekly chart for ETH here, I'm a little bit unsure about this particular low here as it stands. There's different ways to count that, but one of the things I do know is that this move up through here is in 5 waves and it's completed. So that means we've got two choices here with this. We can either look at all of this here as an A wave down here, an A and a B and a C wave for the B wave here, and then come all the way down for wave C as we've mentioned before with this market. Or we can look at this in 5 waves up through to here and then look at an ABC back into the 50-60% retracement level. Now it doesn't have to come down to this level here, but it's kind of nice because it's also at this demand point here as well, so there will be support there, but we can always gravitate over to the closest largest number over here and take a look at that. But we're going to go to the daily chart now for this, and just let me bring in reduced data here. So the move to the upside here in terms of 1 and 2 and 3 and 4 here, and then I've counted this up here, but this little wave 3 in here, we can look at this as 1, 2, 3, 4, 5 here for 1 and back for 2 here and up for 3 here and 4 here. It's a little bit small, so it's a bit of a concern. I know that I can count it a bit differently. I could count this as wave 1 here and back for wave 2 here, and then look at this as 1, 2, 3, 4 here and 5 here, but then we've got overlapping wave structures. But I've seen overlapping wave structures occur when we're working with the levels or rather large numbers. It can skew the wave count somewhat. But either way, we still look, pulled this apart here, that's okay as wave 4 and wave 1 and 2 here, and then all the way up for nice strong third wave, fourth wave and fifth wave. Now, normally when you get an extension in the third wave, then you can look at wave 1 and wave 5 being the same case here. But what we could also do here as well is look at this as wave 1 up here and coming back for wave 2 and then going up for 3, 4 and 5, a bit more of a bullish scene going up through there. But otherwise we could see this if it breaks any lower here, we'll do this on Bitcoin, but it's possible that this could be wave 1 here and back for wave 2 and then going up for wave 3, 4 and 5. But otherwise we'll be looking at this moving down a bit lower here into this 50-60% retracement level or somewhere in that vicinity at that point. So yeah, that's sort of where that is at the moment. I'm not going to go into the daily into the intraday chart with this particular one. With XRP here with Ripple, this is the 1 hour chart, and I just wanted to look at it on the 1 hour chart. One of the things that I wanted to mention with this particular market is the thing I like about it is that, well, in this leg here, we can count this as corrective here as an A wave, a B wave and a C wave down through to here. So it's not the takeaway from that is that because that's corrective, bullish corrective, right, then it makes all of this bullish corrective as well, even though it can come down further in terms of, say, wave 1. And I have to say this doesn't count very nicely as wave 1 here. We could also go wave 1 here, wave 2 here, then wave 1 and wave 2 here. But anyway, I'm not that focused on this particular market either. I'm more focused on the Bitcoin, but I did want to, you know, I wanted to show these two markets. This one here really just to note that this is a corrective move. It's not an impulsive move. So whatever happens over here must be part of that corrective pattern as well. So that's the good news. I mean, if I can come back to ETH for a moment here, the situation here is a little bit more daunting because You know, we can look at this as the A wave, the B wave, and a C wave up here. So we've either got it as wave C up here or wave 1 here. So that means that we can either have a deeper correction here, or we can even have a bigger bear market all the way down here as well, if that's wave C up there. I don't think that's the case, and like I mentioned, we also need to understand that this could also be wave 1 here with a pullback for wave 2 here, coming back to the 61.8%. But we're going to look at that on Bitcoin. So ETH is looking very, very bearish in a particular way. But the saving grace is when we look at XRP here, we can see that this is corrective. If this is corrective, that means that the other markets are going to be corrective in that pattern. So looking at these is quite helpful. Obviously, this too, in terms of the trading levels here, we've got 5 here, which is a major trading level, 65, which is always halfway between two major trading levels. So the major trading levels would be 1, 2, and 3, the Fibonacci numbers, 1, 2, and 3, and then 5, and then 8. So it's an expanding ratio there, using the prices and the Fibonacci prices, an expanding ratio through time and space, and it works quite well. It's helpful, put it that way. So look, anyway, we're getting that bounce off that major level, as you would expect. 5 is also the second strongest number in the market, according to me, after 1. So we'll see some sort of bounce in that regard there. I suppose we could also count this as 1 and 2 and 3 and 4 and down for 5 here, and finishing at that point there as well. So that's not out of the race here just yet either. But this move down through here and then back up here and here, it's moved through the 61.8%. So we need to look at the larger correction in this market. So coming over to Bitcoin, this is the weekly chart here for this. This is what I've held here as the count in terms of a bullish market. Now, yeah, I suppose we could look at this here too as a B wave up here, as an A and a B and a C wave up here. But like I said, we don't have 5 waves up here. We only have 3. Whichever way you want to count it, you will not end up with a 5-wave sequence to the upside. So that's very helpful. The other thing too is that double tops in a market like this here, double tops in a market, they're never the end of the trend. So that's just another plus for the upside. I know that everybody's extremely bullish, but it is too good to gather, evidence along the way and, note these things. So in this case, we could say, number 1 here, double tops are never the end of the bull campaign, as W.D. Gann would say. And the other point, what Elliott would say, well, he'd say, well, this 5-wave sequence here is not finished yet. So there's different ways to count it. As I may have mentioned before, we could look at this as 1 here and 2 here, and the top here for 3, coming back for 4, and then up for 5 here. We'll have a look at that. It's also possible to count this as wave 1 up here and wave 2 back. And there's another little count in here too that we'll look at as well, which is even more bullish, which we just push straight up from here. So there's a few things that we can look at. But I think in the bigger picture as well, you would have to be rational and say, well, at the coming up to the old high here, all the people that have had coins down in this space, or even have been through one of these before, would be saying, whoa, I'm not going through that again. I'm taking my money off the table here, and rightfully so. It's just human nature. It's not right. It's not wrong. It's just what it is. It is what it is. But it's kind of the old thing, really, isn't it? A lot of people tend to take profit on their winning stocks or winning trades, and take profit on their winning trades and leave their losing trades in there. But to me, this is still a winning trade, and it still has higher to go. It's just reacting from this level here in this regard. So it's a major level. It's a double top. There's profit taking going on here. We'll yet to see what type of profit taking is coming in here. This is the weekly chart here, so we can just bring the volume up through here. We could see that the volume has been increasing into this bar. This bar here was a bit lower than this one, so that's divergence in that top there. So you know, your RSI indicators would be showing at that point. So what we can watch here in this downtrend here is we can watch to see if the volume is lower. So when you get a correction, like I'm just saying a correction here in this case, we can see that the volume is lower through here. So that would be like if it was a triangle pattern, then you'd see lower volume here. So corrections are lower volumes. So what we want to see here, especially for the stackers, we want to see lower volume come in here because the volume confirms the price action. Now, look, I'm new to Bitcoin and the cryptocurrencies, as you may know, so I don't know, you know, how the volume stacks up with all of this. So you know, you've got, I mean, you can look at this volume here, for instance, and one of the things that I've learned is that, you know, there's other markets, there's other exchanges, there's futures exchanges, there's probably options markets, and out of all this volume, there's only, when you look at the volume, there's only 25% of volume that actually changes identity. So what I mean by that, there's people move money between their accounts or different accounts within their own sort of environment. But out of all the Bitcoin volume that's turned over, all the volume that you look at, we get it from wherever you want to get it from and amalgamate them and so on and so on. There's only 25% that actually changes identity from one identity to another identity. So the rest of it is just trading volume, I guess. And so it's not very much Bitcoin actually exchanges hands, which means that people are really holding on to their coins. So anyway, I just thought that was interesting, but I'm going to get to know the volume and how it works a little bit better as time goes on. But just reading it here based on the Bitcoin US dollar XBT USD, you know, we can read, I can read volume, so I can read it for bar like a musician would read a score of music. So I can say to you that this is okay looking at this. You know, for a trend to be a trend, you need increasing volume. If a trend is moving up and then you're getting lower volume, well, then you've got divergence. The market's going, you know, up on hot air, and it won't go up for very long. It might go up for three bars or something like that, but it's not going to go on forever. Anyway, enough rambling. But obviously, we're still in profit-taking mode at the level. So in terms of me looking at this, this is what I'd call the arrival at this particular level. So we're still seeing profit taking going on here, but how much is the question. So we will be noting the volume on this. But yeah, look, I think there's a good case here now for excuse me, for putting this third wave right on the top here. So that would mean that we would be looking at a 38.2% retracement. We'll have a look at that in a little bit more detail. So that to there, that's the 38.2% retracement level. So I can just move this little stick over to here, just pop that there and pop that there. So that brings it down about the 16,000 at that point, if indeed that's going to be the case. So we need to confirm that first, but I can count now 5 waves up to that high here. It's just that the fifth wave's a little bit small, but the fifth wave here is higher than the third wave. But anyway, we're going to go in and talk about that. So we've either got that, or we can have this as 1 and 2 here and continuing to build to the upside. So I need to work through all of that. I'm just going to bring in less volume here so we can see things a little bit clearer. So I'll just lower this for the time being out the way for a bit. So from my wave 2 here, I can count this up as 1 and 2 here, and 1 and 2 and 3 and 4 and 5 here for the third wave, back for the fourth wave, and then we can look at that as the fifth wave going up here for the third wave here. If that's the case, this market can come back to the 16,000 as we just noted. That horizontal dotted line is that 38.2%, which is also the wave 4 of 1 lesser degree, so that's cool. Like I said, once again, the extension's in wave 3 here, so that makes wave 1 and 5 here roughly the same size. Well, obviously they're not the same size, but we'd still need to see, we don't need to see wave 5 make a new high here either, by the way. It could be a truncated fifth wave. But there's also the case too that, let me just put this forward, that this move up through here is just wave 1, and this copy this and wave 2 sitting here, because that current low there is right on the 61.8% mark from that high to that low here. It's just the thought. I don't think it's the case, because normally you'll just see a nice very simple ABC correction, and it's a little bit complicated in here for this. So let's just, I'm not sure what charts have updated, but we'll just go in and have a look and work through. So okay, so if this, let's just assume for a moment that's wave 4 and that's wave 5 here making a new high here. Then we'll look at this as wave A here, wave B here, and then wave 1 and 2 here, and then we'll look down for wave 3, 4 and 5 coming into that 16,000 area here. This number here, the 6,500, is a little bit more important to me than the 16,000. So 15 and 16 are two medium levels here. One of them, of course, the 15 is halfway between 10,000 and 20,000, and the 16 here is halfway between 13,000 and 20,000. So that's why that comes in. Very unusual number, but you can see that it plays out nicely, and it's always good to use in stocks as well if you're a stock trader. Look, from what the first thing up here is from this low here to that high here. This is down here at this current low here at, I think it was 17,663. Anyway, doesn't matter, it was right on that low, but we'll just note it in here anyway from that there. So 17,630 roughly. So look, we're getting a bounce off that as one would expect. Will it hold? Is that the low? No, I don't know. I doubt it. Unless we could put this, we could look at this as an A wave here, then an A and a B and a C for the B wave here, then count 5 waves down here and have that low in place and move off from that point. But yeah, I don't think that's the case. But what we could do here is come into this high here and that low there. And if we just take the 50% move here, just for being logical. So if we got support on top of that level, then you could go long from that point. And if you're going to get support on that level, and I'm just saying, I don't think it's the case, but just saying that if that's the case, on that would be 18,500, we could use that. It's a nice number. So we could just drop that down a little bit. So if we've got that there, that means that we could go long here. That would be a classic trading levels pattern sitting here. So we could go long from that point. Okay, so I don't think that's going to be the case, but it could be because of this being just wave 1 here with an A and a B and a C wave down to here, and we're done and dusted and we're moving up. So that would be the long trade at that point. We need to look at both sides of the coin. It's helpful because if it happens, it's not, I mean, look, it's nice to be right all the time. Of course it is, you know, but that's just not the case. We are wrong at times, and we need to know where we're wrong and what we're going to do about it. So this is it. So we can go long at that particular point there. So what I want to do now is have a look a little bit more about this particular structure that's occurring here, and just in case we need to look at it coming down into this level down through here, because we'll be needing to look at this as wave 3 here, wave 4 here, and wave 5 coming down here, and then up from that point if that's going to be the case. So let's dive in and have a bit of a look at this. Let's go to the hourly chart. I don't have any there, so I'm going to go to the 15-minute chart. I just want to fill you in on the count, that's all. So let me just bring a bit more data in here, squash it in a bit. So we've had wave A here and wave B here, and then I was looking down at wave 1 here and wave 2 here. But this here, it's not a, you know, it's first of all, this doesn't count very nicely down here as wave 1, right? That's the first thing. So I would be very happy also to put wave B over here for this. That wave B over here. Which in that case we can just count 5 waves down from that point and have the low there. So that 5 waves down would be this one here at wave 3 here. So that means we wouldn't get wave 4 and 5 down here. We'd just come down to wave 3. But that said, we'll move on from that. That said, this here counts okay. 1, 2, 3, 4, 5 here for wave 1. I can work with that, like, makes sense to me. Wave 2 pulling back up to supply. I always call this supply 1 and supply 2 here, where the corrections are here. So anyway, supply 1 here for that. And then if you've got a keen eye, you can see 1, 2, 3, 4, 5 here. So that would be wave 1 here, and wave coming back for wave 2 in this space. And then I'd have to consider all of this down here as, oh no, hang on a second, I got that wrong. Got that wrong there. Sorry. Working too quickly, doing too many things at once. Just can't multitask like the ladies can. Okay, so so now that looks a bit better, a bit more form in there. So a nice 5-wave sequence there with a nice strong 3rd wave in the middle here. This can pull back up to the wave 4 of 1 lesser degree here, or the 38.2% of this one here. So also not quite on the money there, but so you can pull back up into that space, yeah, or that 38.2, but you see how I've got that. We move that off. So that's the length of wave 1 here. So we could just look at this here for that. Move that over here. So the 38.2 was about there. So that would be about right for that one. Then we could look at the 38.2% for that one, which will bring us back up into right where the other one is as well. So I normally find it doesn't. It will normally work with that larger number there, but it's just good to put things at a starting point there somewhere. So we could look for an ABC here, and then down for 5 here. This 5th wave here this first wave was quite short here. That would leave the extension in wave 3 here. So if wave 3's got the extension in it, then wave 1 here and wave 5 can be roughly the same. So coming down here a little bit further, so we could move that into here, and then wave 4 we'll just put here, and wave 5 coming in here. So yeah, we probably, well, it could come down to the 16, but I'm thinking maybe not, and we'll just see how this plays out at this point. So look, my best guess is that this is what we're going to be looking at. Anything further down past the 16,000, and then Houston, we've got a bigger problem than I expected, but I'm not expecting that, and the reason for that is because of XRP here, because we don't have an impulse wave down through here, we have a corrective wave. So that's why it's telling me that this is a corrective market. But the spanner in the works for that is ETH over here, having this 1, 2, 3, 4, and 5 finishing up here. So it could have a deeper correction here for all of this, unless it gets supported, you know, above this low here, and looking at this as wave 1 here and back for wave 2, and then moving up through here. So this is the spanner in the works, this particular pattern here. So we need to just keep an eye on these things. But yeah, coming back to the bigger picture with everything, we want to see these moves down here. We want to see them on lower volume. So look, I can read it on a daily chart, on a 4-hour chart, a 1-hour chart. A tick chart is better, because when you're looking at bars, you know, when you're looking at like a 1-minute bar, you don't really know how much volume is turned over in that 1 minute. So that's why I use a tick bar. So you can be 40 ticks. So that will be 40 40 contracts at that point, and you know exactly what each bar is holding. But when you're using time periods, 1 minute, 5 minutes, those sort of things, the volume, you know, each one of them can have a different amount of volume in them, so it's a little bit trickier. But anyway, the main point here, if you can't read it, then you just go out to the next time frame here and we'll look at that. So let's see today's Wednesday, so let's see what happens by Thursday and Friday for this bar here, because remember that for a trend to be a trend, and if this is going to be a downtrend here, then this volume bar needs to be more than the previous volume bar, because when you're reading volume, it's the relationship between the two volume bars, right, and then the relationship between the price. So if this is going to be a bear market here, we need to see more volume in more volume on this bar than that bar, and then we would also need to see if the trend was going to continue. Let's just say this bar comes up and it's got more volume than this one, then the next bar that comes down after that, if that's going to take us down further, then that would need to be more volume than this bar. The same as these are all moving to the upside here. Sometimes you'll get a bar, these are all, that one's closed down, but sometimes you'll get a bar that closes lower than its previous open, and then that bar will be lower here. But if it's closed lower than its open and we've got less volume in this bar, then that's telling me that that's a correction as well. Anyway, we won't go into all of that. So look, anyway, there's the update. Just recapping ETH here for a moment. This is the danger sign here of this being an A wave down here, an A and a B and a C wave for the B wave that can pull all the way down through to here. So we'll keep an eye on the volume for that. But otherwise, we'll look at this as wave 1 to the upside, and we'll look for wave 2 to pull back. Doesn't have to pull back to the 50-60% mark when we're working with large numbers, and 5 here, the 500 is 5 being the second strongest number in the market. It will find this a bit of a sticky number, so it will just sort of hang around here in that regard. So we'll keep an eye on that. For Bitcoin coming back up into the, just to recap on the daily chart here, I guess, so just give me a second to pull this apart here. We'll look at all our options here just once again. It's likely that we've got wave 2 here and we've got wave 3 in place, and we're going back for wave 4. I was hoping wave 5 would take us above the level to give us our first high above the level, but that's not going to be the case. It could be as long as that current low there at whatever it was, 17,630 stays in place, and the market moves up from that there, and then we can look at that as wave 1 here and back for wave 2, and we can look at 3, 4 and 5 up there further. But if it drops any lower through here, then we need to look at that as wave 4, pulling back to the wave 4 at 1 lesser degree, and we're basing that wave 4 off this wave count, but also too we're basing it off what Ripple has done here, has shown a clear corrective pattern in this particular space. Alrighty, thanks for tuning in. Sorry to make the video so long. I've got to watch myself. I do waffles. Thanks. Alrighty, cheers.